Let's start off with looking at a big group. This is the second largest US chain of pharmacies, but it is the largest in the world and the largest by market cap. We're talking about a company called Walgreens Boots Alliance. So that's Walgreens in the US as well as Duane Reade, and then internationally it operates as Boots, and then Alliance is a pharmaceutical distribution business. Market capitalization $90.1 billion. That's a big company. Price earnings ratio 21.2, dividend yield 1.88%. Let's go straight to the share chart. That is only showing you the share chart since 2014, and that's because that's when it did the Boots purchase. Walgreens itself has been established in the US since like 1901. But anyway, talk to us about Walgreens and its strengths and weaknesses.
So internationally, it's the biggest by far. It's really centered around the US because the Boots side of it isn't that big compared to Walgreens. So Walgreens is a very well-established, healthy retail chain. It's you could argue this is maybe in the sweet spot of the market because you've got the pharmaceutical companies on the one end and the consumer on the other, and sometimes the consumer is not the direct consumer, it might be an insurance company. And so you could argue that potentially Walgreens is in the best space because not too much regulation, and then the ability to sell other products, which is playing off those nutraceuticals, health and beauty trends. So nicely positioned business, and I think in terms of the trends that we're talking about, you'll see turnover continue to grow in the space because the drugs need to be purchased from somewhere, and the consumer certainly is going to keep purchasing these drugs from the local pharmaceutical company, pharmacy rather. And that's what Walgreens essentially is.
Because if you've been into the Walgreens or the Duane Reade stores, say for example in Manhattan, I think some people might have been to New York, you'll find that those drugstores are all pervading. I mean, there's literally one every couple of meters. And they sell everything from the pharmacy, dispensary stuff at the back, through the sort of hair care products, the skin creams, the toothpastes. But then they also do OTC medicines, which is both the kind of generic type stuff as well as stuff which is obviously not medicine.
Not prescribed, correct.
Then it's got, you know, sandwiches, cans of beer, you can buy Band-Aids, you can buy a whole lot of funny little appliances. I mean, I think the store model is well known to people.
And so you have this crossover where it's become a convenience store almost because it's so pervasive. It's so available. So you'll go in for a headache pill and end up with the water to take it and maybe a snack on the side.
And a banana as well, so that you don't fall on the pavement.
Exactly.
And so they have a very broad appeal, and they are where people go to also to buy kind of other sort of sideline essentials like, you know, airtime or metro tickets or lottery tickets and all that kind of stuff as well. Margins are good, well beloved. Operationally though, I suppose they do have competition from sort of the bigger, because in all of the sort of Walmarts and other Targets and things, you would also find similar sort of pharmacy type products. So you've seen these retail stores or the retail chains try to move to a full service model. So in South Africa, you've seen ShopRite, Pick n Pay moving into where they have a pharmacy in store, Spar also starting that. So there is competition from the mainstream retail, and I think that will continue. It's almost that it's becoming really convenience based. Just two other things from my notes here. They also have an online experiment, you could call it. They own this websites, beauty.com and drugstore.com, which I think do okay. And then the other interesting thing about them is because they're so big, they've been able to develop their own in-store brands globally. So obviously Boots has a whole lot of things that it manufactures itself or gets manufactured, which sell very well. They have things called Number 7 and Botanics, which sell well in their own stores. So that's another thing, perhaps. Very much so. And we'll talk about the two local players, but you see them following that lead very much so, where these house brands are becoming more pervasive. Okay, so I don't want to spend too much time on these international players because I want to give enough time in the second half of the show to the locals. So this one looks okay to you. How would you rate it, hot or not? It's busy trying to acquire a big competitor, which is causing Rite Aid. That's correct. Very big, a lot of antitrust problems, and I think that's caused a lot of problems. But whether that happens or not, I think the fundamentals of the business are good, and I think it's going to get some fruits from this
big expansion, and the global network. So I quite like it. I like it for the trends that
and it's interesting how it managed to get control of Boots, you know, the UK and European business, and you know, obviously it's headquartered in Deerfield, Illinois. So that's interesting. A global corporation. I think it's probably still in a position to extract further benefits from its international business.
I agree with that.
So let's give it a kind of a qualified hot.
Let's